first chart, what we're looking at is, they call this particular one, it's a price gap. And in the previous lessons, and I will not go into writing the what is called the open, the high, the open, the close, and the open and close, because in the previous four lessons I continue to talk about where the market opens when the candle is in the bearish and where the market opens when the candle's in the bullish. So I don't want to keep going back over that information. So if you want to go and understand that, you can go back to the videos and just rewatch them so you can understand as we move forward. But today we're going to talk about gaps, and that's what we're looking at right here in this area, gaps. And I put the dollar sign because gaps is profit. You know, gaps is a very good indication that the market is in a trend moving forward, whether it's up or it can be a gap going down as well. It also confirms a particular indicator that you're going to be learning about today, which is one of them is called the doji. So gaps are very important in that area. So just know, and I will go and see if I could show you some examples of gaps. As we can see right here, there's a gap, and you can see it as it come down. There's a gap down. We also see a possible spinning top, which we're going to talk about next. So before I talk about what that is, the spinning top, I just wanted you to pay attention to these gaps. Let's see if we can get more candles and see more. I like to, one thing you're going to see that I do is, even though I have these pictures here, and there's still pictures of the S&P 500, which is the market that we're going to continue to talk about. This is what we're going to set up our charts on, the S&P 500. But remember, you're going to be able to set your chart up on any market. So if I go over here, what we see right here is what is called the chart platform that I'm going to teach you after we understand candles, how to navigate through. This particular platform, I'll let you just a little bit about it, even though I'm not trying to go into it. But this particular platform in general is free at this point. This is because it doesn't have a lot of I personally have another chart that I pay, and I pay as much as sometimes $60, but I'm getting like 16 charts on one screen, on one, able to place them on different screens. This one will only allow you to navigate through one chart, and because we're going to be dealing with the S&P, that's really all we need. So then what I'm in now is called a day. Each one of these candles are a day. One day. You can see the dates down here, even though they don't. There is a way to set it up if you want this to say July 1st, 2nd, 3rd, 12th, all the way to the 12th. You can do that, but I don't really need it, because if you look at this, if I put my line right here and you look right at the bottom, you'll see it says 0221, which is the 2nd of July 2021. So this market is active all the way until October the 22nd, which is the date that we're on now. So we're looking at a lot of these things. So this market is actually up to date. Of course, you know, today is the 23rd, but this is Saturday. The market's not open on, it's closed on Saturday, so you're not going to see a candle until the 23rd, and the holidays as well. Okay, so I'm just running a little bit. I'm just showing you the various different markets that, like for instance, here's the British pound. You see how quickly that went over to the British pound. So that's why it's important that you learn these candles, because these markets right here is, some of the markets I actually chart. Right now I'm looking at, if you want to just deal with futures, you have the Russell, the Nasdaq, the Dow Jones, and the S&P. You also have the British pound versus US, Euro US, US Japanese yen, um, US versus Canadian dollars, hundreds of markets. And again, the strategy that you're going to learn can work on each one of them. All you have to do is just stay with me. Stay with me on this. Keep learning. Okay, so we were talking about gaps. We were actually talking about uh, we were talking about. Let's see. I hope I didn't get away. We were talking about gaps, right? And so and I just wanted to show you within. This is not a gap because when it opened right here and closed right here, when its high is here, but when it opened here, it pierced it. So that's not considered a gap if it's pierced within the shadows, which we talked about in the previous lesson. So if you just tuning into this class, you need to go back to the previous lesson so you understand these are shadows, wicks. They're the stems of the candles, and this is showing that the bullish won this battle with the bearish pulling it down, but the bullish pulled it up more. Here it shot up this way a lot higher. Okay, so we can shrink this a little bit just to speed up if we want to just. There's really not a lot of gaps right now, but there is going to be some gaps. It's always gaps. Let's just, for the sake of it, let's jump into another market. Let's just say the British pound. Well, we already in the British pound. I think we are. Well, let's go back to the, well, no, let's stay here. Gaps are everywhere. Gaps are in every market. Sometimes you'll also find these gaps in, if we trickle down to the, let's just say let's say the hour. See if we can find gaps in here. Let's just say the 15 minutes. Like I said, gaps are in every sector of trading. But anyway, there's a gap. How about that? Look at that gap. So here's our profit. That's where it would have been extreme amount of profit. Sometimes you may have had a strategy that allowed you to get out, let's just say right here. And these are some of the tools that you're going to learn when it comes to trading. So right now I'm just going to click on one just to that we can use. Okay, and I'll give it another color. Which right now I'm not going to do all that. We're just going to focus on dealing with what we have. Okay, so here you may have been getting in, wanted to get out right here, but it gapped up to here, and you may have had what we're going to talk about, trail stops that would have, this market would have opened right here, and it may have kicked you out right here, even though it gapped right here. It's okay. You hit your target. You made your money. So gaps are good. Gaps show trends, and you can see where it continued to go up, and then eventually it went down. Okay. So this is what we want to understand. That's a major amount of profit there, and these are what they call gaps. And gaps also create trends that can go up. Okay. Next, we're going to talk about spinning tops. Now you can see that these two candles are similar in size. They also, you can see that in these particular ones, the wicks are the same. The thing about they have small bodies, right? And they have what is called these spinning tops is signs of potential reversals. They're also known to be called morning stars. Earlier we talked about Marabojos, which is sideways, the market going in sideways. It also shows that the market is in indecision. When you see this, you can see where the bulls, the ones that go up, was fighting. They were fighting, and you can see they pulled it up, and you can see that here's the balance of it. Then you can see the bears come and pull it down. You see that right there with the wicks, the stem, the shadows. Just understand these are just shadows, and you can see what pulls it up. You can see what pulls it down. You can see there's an even battle there. They're just battling. But they're even. No one won, no one made no money. There's nothing to see there. It is a sign that it may be a reversal. We don't know what the decision, what direction the market is going to go in. Doesn't really convey a lot of information, but there is things that you can look at. There's things within this spinning top that I don't want to kind of get in until you start to understand a little bit more about candles, because it can be a little confusion. But just know that when you see these are spinning tops. And so if we go into the market, we're in the NASDAQ right now. Let me just see if I can make sure this is, it's auto field. Even though I don't like to, but I like to be able to see this top. So I'm going to take it off auto so we can, and again, you're going to know how to navigate just as quick as I am. But yeah, this is better. And we can see right here, lots of spinning tops is also not good, because it's not really telling you anything. But this was a sideways market. Could be a possible pennant flag pattern. Let's see if I can show you right quick. Again, this is something that you won't know until you get into trend lines, right? And you can actually clone this. I usually clone it for sake of speed, right? So if we look right here, kind of bring our trend line, could have been right here, could have been right there. This one could have been somewhere right in there, right? And what do we have? We have what is called the pennant. Pennant is just a flag. You see those kind of like, I don't really see them that much, but we sort of kind of see them in school fraternities, and they have the pennant flag, and it has that point that comes like a sideways triangle. But you can see a lot of spinning tops, which is a sign of a reversal. And what happens is you can see the market went here, more spinning tops, which this is a sideways. And this entire section could also be considered a flag, which is like I told you about or it can be another spinning top. See, because of we look at how we have to do our trend lines when we follow the rules of the trend line. Because there's rules of placing a trend line that you're going to learn next, and we're going to go into trend lines next. But you see that flag, then we see where the market sort of just kind of shoots on down. So spinning tops are good indicators. They're good for you to know, and we need to continue to pay attention to them. I want to say one more thing too. I do not want you to get caught up on looking at this spinning top the way you see it here. It's not always going to be where you're going to see both of these are completely even. That does not mean it's not a spinning top. One end might be a little longer. One end might be even shorter. Both ends might be shorter. Some of them might be completely where they don't have what is called a wick, a shadow, the stem. So you have to don't get caught up on just looking at a spinning top one particular way. That's why I like to, even though I have charts for you that are like sort of like I just took a snapshot of it, I like to go to the platform to show you possible different ones. This is where you can really understand spinning tops. They come at the top, they come at the bottom, so they come in the middle. This could have been a spinning top right here. indication, even though the market was coming down here. Indecision, we see it right there. Boom, what happened? There's that gap. All right, at one point there's a spinning top. This is a possible spinning top, or it's a possible could be a morning star, could be a doji, but it's not. But those are what we look for. It's these spinning. There's a spinning top right there. See where the market went down. So I just want to get you in the habit of not getting caught up on looking at. Now this may not be a spinning top. We're going to go talk about that in a minute. But I just don't want you to get into the habit of just thinking that spinning tops are just always the same. Okay. So with that being said, let's just go to the next one. Let's see. Okay. So we talked about the spinning top, right? And we talked about the gaps right here. We just talked about the spinning tops. Next, we're going to talk about the doji.